Good morning, traders and investors. Roger Scott here, Senior Strategist for The Trading Pub. Before I get too deep into these videos, a lot of folks still ask me, Roger, where do I find these videos? Go to YouTube, go to Roger-Scott. You will find the video, click on it, and subscribe to the channel. You'll be notified. If you hit the bell on YouTube, you'll be notified when I post these videos, which happens about 8:30 in the morning, an hour before the market opens. Also, don't miss my VIP room. The link is also below the video in the YouTube channel. And lastly, if you haven't subscribed to my Telegram channel, you're really missing out. Go to rogerscott.com/Telegram. That's rogerscott.com/Telegram. All of this information can be found in the YouTube channel below the video or on our website. Now let's begin. What am I wasting your time for? It's so early. So overnight, the Nasdaq is doing really great. It's up 91. That's not random. The Dow's up over 100 points. That's clearly not random. A little bit beyond random. Anything over 100, 110 is beyond random. On the Nasdaq, anything over 60 is beyond random. As I mentioned to you over the last couple of days, and I did mention to you, I said the market's a little hungover. I said the market's either going to, right here after making a swing high, I said the market will probably either cool off or consolidate. And it's been consolidating the last 1, 2, 3, 4 days. Actually 1, 2, 3, 4, 5 days, and now it's ready to go higher. We didn't see the downside that a lot of traders were expecting. As you remember, what I said was, there's a chance we can continue going higher, but there's a chance we can have a minor pullback. And I did say if we have a pullback, I didn't expect a big pullback. I expected a very, very minor pullback. Why? Because seasonality. We're still in that seasonality, end of year seasonality, and you can't get away from it. Now, before you get too excited, take a look at the long-term chart. You're not going to get a lot of guys showing you this, but look, there's a resistance level, a very, very strong resistance level going back all the way to 2022. Actually, it goes back all the way to beginning of 2022. And that resistance level is right above us. It's actually right above us, about 460. We're at 456.90. This thing is at 461.41. I don't think it's going to happen today or tomorrow, but in the next couple of weeks, watch out for these levels. There's a really good chance we can hit these levels and back away. It happened here just to show you. It happened there, and it looked like it happened here too. Now, it's a little bit lower over there, to be honest with you. It's actually right here, but you get the point I'm making. I'm just connecting the most logical levels here for you. There is definite resistance near the current level, just slightly above where we're at. So be very, very, very cautious. The other thing you want to pay attention to is gold. It's not common to have a rally in the stock market and a rally in gold. And honestly, I don't really know the fundamental reason for this rally. But this is a significant rally. And there's no major resistance for gold. Just to show you something, look at the price history here on GLD. You don't have major resistance all the way up to 193. We're only at 189, so it looks like it can go a little bit more, and I don't really care what the fundamentals are. The bottom line is it looks like gold is breaking out, and if it's breaking out, it's got some overhead resistance above us at this level. Now, once it goes above 193.44, sky's the limit. I mean, literally, sky's the limit, but it's got to pass this level first. If it doesn't, look at how much resistance you have up here. So keep an eye on that market. Now, as far as Fed data today, you've got GDP. It's coming out in about 45 minutes. You've got international trades and goods and services. And not more importantly, equal as importantly, you've got earnings today. Dollar Tree. That can have an impact on Dollar General, which we liquidated yesterday. Wink, wink. Wonder why? Let me think. Salesforce. That's a big, big company. Remember, this is like Shopify. This company, if they do well, it has an impact on a lot of retailers and the retail sales industry because so many people use Salesforce. We used to use Salesforce. It's for bigger companies. It's not for companies like us. It's not for small or medium-sized companies. It's for big companies. So this can have a big impact on the retail, on the consumer discretionary sector, one way or another, just like Shopify could. So we got to be very mindful of that report. You also have Foot Locker. This has a big impact on Nike, by the way. I call Foot Locker the Nike retailer. You got Hormel Foods, some consumer staples. You've got Victoria's Secrets. Hey, we gotta respect Victoria's Secrets. And that's about it. But you do have earnings on Dollar Tree, Salesforce. There's a couple of other ones I might be missing. Oh, Snowflake. Here it is. Snowflake. I'm missing Snowflake. But these are big tech stocks or second tier. They're second tier. They're not FANG stocks, but they're almost as big as FANG stocks from a trading perspective. And they do have a big sentiment on Wall Street. Workday, that's the one that came out yesterday. And Splunk. Hopefully you didn't get splunked. Anyhow, let's talk about global economy. And I'll do the technicals for you on the U.S. stock market, and I'll talk about sectors. So market participants geared up for a slew of U.S. economic data, including energy prices, GDP, inflationary data, awaiting earnings from cloud sector, Salesforce, and Snowflake. That's the one I forgot about. Economic data on Tuesday showed that consumer confidence was better than expected. That's great. Now, here's where we get into real wrinkles. And listen to what they said. Waller said Tuesday he's increasingly confident that monetary policy is currently well-positioned to slow the economy and bring back inflation. Inflation rates are moving along pretty much like I thought. They are. Me too. If progress continues for several more months. Okay, this is the part I want you to read twice. We're in December right now. In December, right? Or actually, we're not in December yet. Sorry. We'll be in December before you know it. Before I'm done with this video, we'll be in December. But for several more months, 3 months, 4 months, 5 months, he's not putting a number on it. He's just saying months, not weeks, not months. But let me continue this. And then we could start lowering rates just because inflation is lower. Chicago Fed Austin Goolsbee stated that he believes overall inflation was decreasing at a pace not observed since 1950s. It hasn't happened yet. Hold on to your projections, buddy. You're going a little. You're cutting to the second part of the movie. At the same time, Bowman suggested that the central bank would likely need to increase borrowing costs further to bring inflation down. Folks, if you haven't figured it out from this paragraph that I highlighted in yellow, they have absolutely zero idea of what will happen and how much impact what they're doing is going to have in the next 6 months. They're not going to tell you that because that would be very unprofessional. We just don't know. We have no idea. They're not going to tell you that. They're going to give you their spiel. But there's now a 40% chance that there's going to be a rate hike drop in March. And meanwhile, Bowman's saying they're probably going to have to increase rates. And this guy's saying 3, 4, 5 months. He has no idea. He has no idea. So here's my question to you. What if yesterday they said, listen, it's moving in the right direction. We have absolutely no idea what will happen in 3, 4, 5 months. Do you think the bond market, based on that data, would do this? Let me show you. I don't think so. I don't think it would. I don't think it would rally this high. I think it would kind of stay around here. But no, they have to open up their big mouth, and then now they change sentiment, and now we're at the 100-day moving average resistance level. So this is really bullish for the market. But I'm telling you, I'm going to remind you of this. I have a memory of an elephant. I really do. I'm going to remind you about this in about 3 or 4 months. Because if you guys think that interest rates are going lower in March, oh boy. Earnings, as I mentioned, Salesforce, Snowflake, Dollar Tree, they're going to report earnings. Commerce Department is going to report GDP today. That's going to be very important, and that's something that the Fed pays attention to. They're looking at, here, let me just give you an idea. This is an important report. They're looking at consensus is 4.9. Personal consumption expenditures, they're looking for the data to be flat. It'll be very interesting to see if consumption expenditures go up and if this stays flat. But let's see. It's going to happen in 40 minutes from now. So we'll have that data. But I'm just loving this Fed speak. They have absolutely, I'm telling you right now, I know exactly because I could see it. They have no idea. They have zero idea. But the market believes they do. All right. GDP's coming out. Crude oil inventories is coming out. Crude oil is getting a little bit of a head start. I'll talk about that in the VIP room today. Make sure you're there at noon. Link below this video. Europe is giving us a little bit of a tailwind, which is great. China is not giving us any tailwind, and Japan also is not giving us any tailwind as investors continue to lock in profits following last week's rally. Financial stocks declined on Wednesday. Workday climbed 8%. NetApp up 12%. Las Vegas Sands slumped. China. Jabil slumped. So just to give you an idea of what's happening before the opening bell. And as I said, we have a slew of earnings today. Salesforce, Synopsys, Snowflake, Dollar Tree, Hormel. I'll be watching at Hormel. It has an impact on consumer staple stocks like GIS and Coca-Cola and all those other stocks. Just heads up, Okta, tech company. So be very, very careful. These earnings could bite us in the butt one way or the other. Looking at the SPY, aside from looking at long-term levels, we're looking pretty good here. But as I mentioned, we have a lot of resistance here. Now, the market looks pretty bullish today. It had a good time to consolidate, but don't get too excited. Let's wait for the market to open. Let's wait for the GDP. We may just open up here and come back down. I don't know what will happen today because the GDP hasn't come down yet, and we don't have any major sentiment. FANG stocks, on the other hand, are doing well. Now, let's look at sectors, and this is something to be nervous about. 6 weeks ago, technology, semiconductors, right? Remember, we go through this every day. 3 weeks ago, semiconductors, technology, QQQ, consumer discretionary, communication services. But let's look at the last 5 days. Consumer staples, utilities, real estate, basic material. That's blue chips, blue chips, blue chips. Look where the S&P is, and look where technology is. Look where semiconductors are, and look where home builders are. So in the last week, they haven't been doing as well. Now, it could be because of this little downturn we took, and they can start coming back up. Or blue chips could be leading. I want you guys to focus on that. Focus on whether blue chips or technology is leading. Divide it into two parts, blue chip and tech. Be broad about it. Like right here, you could see the first half is mostly blue chips. Here, it's mostly tech. It doesn't have to be specific. If you notice that, you'll have a much better idea of where to focus on. And remember, the thing about FANG stocks are both blue chips and tech. So they got a little bit of both. Now, it's Wednesday, and I'm going to give you some actionable trade ideas. There's a lot of good ideas right now. There's a lot of things going on right now. So, Uber. I keep talking about Uber. I started talking about Uber at 44. Now it's at 55. Remember, could possibly be in the S&P 500. Let's see here. Gap Store looks really good here. I like that. Look at that. It's kept going higher as the market consolidated. I like GPS. I like CrowdStrike. I like those two stocks. And I really like Zscaler a lot. Zscaler, Gap, CrowdStrike. Gold may also be rallying a little bit, but those would be the stocks I would be looking at. Gap, Zscaler, CrowdStrike, and gold. I know. Talk about selecting combinations of stocks. Now let's look to the downside. Interactive brokers, SARK, right here. I've been talking about that since it was at 37, by the way, on this show. Deere looks great, but very volatile, and HP. So believe it or not, if stocks right now are making lows, they're really, really weak. You got interactive brokers, you got D, you got SARK, and you got HP. If I had to choose one, I would probably choose interactive brokers. And if I had to choose two, I would probably choose HP and interactive brokers. Now, before I let you go, folks, I've been talking about something. I've been talking about this infinite loop all week. And I'm still blown away about how powerful this advantage is. Most traders have no clue it even exists. And it's overlooked in a very overlooked market that doesn't have any correlation to stocks. It's a market that's 1,000 times bigger than the stock market, 1,000 times. But a brilliant trader, he's developed his very own robotic trading assistant that helps. That way, you barely have to lift a finger to target 15 to 25% extra cash each and every month. It's not risky cryptos, it's not boring bonds, or even regular stock market, which has been stuck in the mud during the holidays. I think it's getting up there, but it has been stuck in the mud. If you haven't taken the time to join us yet, click the link. Click the link below this video to learn exactly what the Infinite Edge robot is. It's really cool. And you need like $100 to get started. You don't need to break out your wallet for this one. It's $100 to start. Give it a test. See how it goes. It's very, very cool. Follow the link below, and I'll see you in my VIP room. If you have questions, send me emails, roger@rogerscott.com. I hate to say I told you so, but I told you about most of these stocks doing exactly what they're doing right now. I'll see you guys later. Have a great day. Bye.